What is up, everyone? Welcome back to the channel. It is May 29th, 2026, and the market is absolutely cooking today. We have got 5 stocks putting up serious numbers this session, and I am talking big percentage gains backed by above average volume, the kind of moves that get traders and investors paying attention. We have got Palantir leading the charge with an 8% explosion, Oracle surging nearly 7%, Eli Lilly knocking on the door of all-time highs, plus Coinbase and SoFi rounding out our top 5. We are going to break down every single one with the charts, the technicals, the catalysts, and most importantly, what you should be watching next. Let us get right into it. Alright, kicking things off with the one everyone is talking about today, Palantir Technologies, ticker PLTR, up a massive 8.17% to $143.34 as of this session. And folks, this is not a low-volume head fake. Volume is sitting at 51.6 million shares, which is 52% above the 30-day average of 33.9 million. When you see a move this size backed by that kind of volume conviction, you have to take it seriously. Let us talk about the technicals because the chart is telling a very interesting story. Palantir is trading right at its 200-day simple moving average, which sits at $143.34, almost to the penny. Now that is a significant level. The 200-day SMA is the line in the sand for institutional investors. Breaking above it and holding is a major signal. The 20-day SMA is at $136.94 and the 50-day is at $141.72, so the stock has essentially stacked all 3 moving averages beneath it after today's move. That is a bullish alignment. RSI is sitting at 60.0, that is healthy momentum territory. We are not overbought yet, which means there is still room to run before the oscillators start flashing warning signs. The 52-week range is $118.93 on the low end to $207.52 on the high, and Palantir is sitting right in the middle of that range, which tells me the upside potential is very real if the momentum holds. Over the last 6 months, the stock hit a high of $194.17, so there is roughly 35% upside just to get back to that 6-month peak. The catalyst here is almost certainly AI government contract flow. Palantir's AIP platform continues to win defense and intelligence agency deals, and any new contract announcement or expansion of existing work tends to light the stock up exactly like we are seeing today. My support level to watch is $136, which aligns with the 20-day SMA and recent consolidation. Resistance is at $155, which is where we saw sellers step in during the last attempted rally. If Palantir can clear $155 on volume, the next target becomes the $170 to $175 range. Next up, number 2 on our list, Oracle Corporation, ticker Oracle, up 6.67% to $203.70. Another big gain backed by serious volume. Oracle printed 24.99 million shares today against an average of 14.59 million, that is a volume ratio of 1.71, meaning nearly 71% above average. That is institutional accumulation happening in real time. Now let me walk you through the technical setup because Oracle's chart has completely transformed over the past few months. The 20-day SMA is at $188.41 and the 50-day is at $169.50, and Oracle is trading well above both. The 200-day SMA is at $203.70, again, almost exactly at today's price, just like Palantir. That is a fascinating coincidence. Oracle is attempting to reclaim its 200-day moving average in a single session with explosive volume. If it closes here or above, that is an enormously bullish development. RSI is at 57.6, which is moderate and healthy. Not overbought, plenty of upside runway from a momentum standpoint. The 52-week range tells a story of volatility. Oracle touched $134.57 at the low and hit $345.72 at the high. Yes, that 52-week high of $345 means the stock is still roughly 41% below where it was at its peak, which provides long-term context. Over the last 6 months, the high was $221.65, so that becomes our near-term resistance target. The catalyst for Oracle today is almost certainly cloud infrastructure. Oracle Cloud Infrastructure, or OCI, has been winning major deals away from AWS and Azure, particularly in the AI training workload space. Reports of major hyperscaler partnerships and capacity expansion announcements tend to be rocket fuel for this name. Support for Oracle sits at $188, which corresponds to the 20-day SMA and should act as a strong floor. Resistance is at $221 to $222, which is that 6-month high. A sustained break above $222 opens the door to a much larger recovery move back toward the $250 to $270 range over the next several months. With a PE of 36.6 times earnings and a market cap of $585 billion, Oracle is not cheap in absolute terms, but relative to its cloud growth trajectory and the AI infrastructure build-out, the valuation looks justifiable. This is a name I am watching very closely. Alright, number 3, Eli Lilly, ticker Eli Lilly, up 4.05% to $1,126.80 per share. This is a trillion-dollar company, folks, market cap of just over $1 trillion at $1.004 trillion. And it is knocking on the door of its 52-week high of $1,149.10. Let me give you the technical picture. The 20-day SMA is at $1,007.02 and the 50-day is at $949.42, so Eli Lilly is trading a massive $177 above its 50-day moving average. That shows how powerful this recent rally has been. The 200-day SMA is at $1,126.80 right at today's price, making this yet another stock today reclaiming its 200-day in a single session. There must be a macro catalyst or broader market rotation driving institutional buying across multiple names simultaneously. Now here is the one caution flag I want to highlight, and I always give you the full picture on this channel. The RSI is at 79.1. That is officially in overbought territory. Anything above 70 is considered overbought, and at 79, Eli Lilly is running hot. This does not mean the stock cannot go higher. In a strong uptrend, stocks can remain overbought for extended periods. But it does mean the risk of a short-term pullback or consolidation is elevated. The 6-month high is $1,126.80, which is today's price, meaning we are at a fresh multi-month high right now. The 52-week high of $1,149.10 is only $22 away, less than 2% higher. That level is going to be watched by every trader on the street. The catalyst for Lilly remains what it has been for over 2 years: GLP-1 drugs. Mounjaro, Zepbound, and the broader obesity and diabetes drug pipeline continue to print cash and generate clinical data that keeps investors buying. Any positive data release, capacity expansion announcement, or new indication approval sends this stock higher. Support is at $1,080, which is the prior consolidation zone and aligns with a pullback to the 20-day SMA area. Resistance is the 52-week high at $1,149. A clean break above $1,149 on strong volume would be a major breakout signal with substantial upside potential. The PE at 40 times is reasonable given the growth rate. Number 4 on today's list, Coinbase Global, ticker Coin, up 4.87% to $182.25. Volume is 9.03 million shares against an average of 7.72 million, so the volume ratio is about 1.17 above average but the most modest of our 5 stocks today. That is worth noting. The technical picture for Coinbase is more complicated than the others. The stock is trading below both its 20-day SMA of $194.70 and its 50-day SMA of $189.62. That is a bearish technical structure. The stock is below both near-term moving averages. The 200-day SMA sits at $182.25, right at today's price, which is the silver lining. The 200-day is acting as support here and today's bounce is encouraging. The RSI at 45.0 is neutral to slightly bearish, not oversold, not overbought. It suggests the stock is in a recovery phase rather than a powerful uptrend. When you look at the 52-week range of $139.36 to $444.65, that high of $444 tells you how far Coinbase has fallen from its peak. The 6-month range shows a high of $277.36 and a low of $141.09, so we are trading in the lower half of that range. However, today's move is meaningful in the context of crypto market dynamics. Bitcoin and broader digital asset sentiment has a direct impact on Coinbase's trading revenue, and any uptick in crypto activity benefits Coinbase disproportionately. Regulatory clarity in the crypto space, particularly around spot ETF frameworks and stablecoin legislation, continues to be a slow-burning tailwind for this business. My support level for Coin is $168, which was a key pivot level in the recent trading range. Resistance sits at $200, which is a major psychological level and aligns with the 50-day SMA zone. A sustained reclaim of both the 50-day and 20-day moving averages would shift the short-term outlook from neutral to bullish. Until then, I am rating this a hold. Today's bounce is encouraging, but I want to see follow-through volume and a move back above $190 before getting more constructive. And rounding out our top 5 today, SoFi Technologies, ticker SoFi, up 4.95% to $16.97. Volume today is 69.07 million shares versus the 64.6 million average, a volume ratio of 1.07. Modest relative to the other names today but still above average, and for SoFi, that level of volume is quite normal given the retail investor base that loves this name. The technical setup for SoFi is actually one of the cleaner setups in today's list. The 20-day SMA is at $15.95 and the 50-day is at $16.69. And SoFi is trading above both of them at $16.97. The 200-day SMA sits at $16.97, once again exactly at today's price. Today, all 5 of our stocks are at or reclaiming their 200-day moving averages. That is a very powerful broad market signal and suggests strong institutional accumulation happening simultaneously across sectors. RSI at 59.2 is solid and healthy momentum, trending towards 60 without being overbought. This is the sweet spot for momentum traders. The 52-week range is $12.86 to $32.73, so SoFi has enormous upside potential if it can rebuild momentum back toward those highs. Over the 6 months, the stock hit $29.60 at the top and $15.15 at the bottom, so today we are sitting in the lower third of the 6-month range. SoFi's story is a fintech bank that has been methodically growing its member base, deposits, and lending products. With a PE of 37.7 times and a market cap of $21.8 billion, it is priced for growth. The catalyst today could be related to consumer lending data, fintech sector rotation, or news around its banking division performance. Support for SoFi sits at $15.50, which is the recent consolidation low and near the 20-day SMA. Resistance is at $18.50, a prior distribution zone. A break above $18.50 would be very constructive and could target $22 to $24 over the coming weeks. I am rating SoFi a buy on today's setup: clean moving average structure, healthy RSI, and significant upside room within the 6-month range. Alright folks, that is a wrap on today's top 5. Let me give you the quick summary. Palantir, buy, high confidence, target $172. Oracle, buy, high confidence, target $238. Eli Lilly, buy with caution, that RSI at 79 deserves respect, target $1,210. Coinbase, hold, wait for confirmation above $190. And SoFi, buy, clean setup, target $21.50. One final note: every single one of these stocks is sitting right at its 200-day moving average today. That is not a coincidence. Institutions are buying. If you found this valuable, smash that like button, it helps the channel more than you know. Subscribe and hit the bell so you never miss a video. Drop your questions in the comments below, I read every single one. See you tomorrow for more market action. Stay sharp out there.